you're going to see more bumpiness, much as you said, around the U.S. elections. And the key message that we have for people is that you need to be prepared for election week or weeks, not election day, because you could have delays in the vote count, prolonged vote counts with the number of absentee ballots. You could have challenges to some of the elections. You already had a situation in the U.S. where the alternative voting methods had been going up to about 40%. So there are some estimates that you could have absentee ballots as much as 70%. And some of these votes you have 5 days after the election that the votes can still come in. So I think what the markets have been looking at is that you could have uncertainty just around some of these election processes this time, because we are in the midst of the pandemic, not just the platforms, but the elections themselves, and when we will see a clear result.
Oh, yes, indeed. And so from now to election time, what do you think the markets would do?
Well, I think that you will have to watch a number of things. The first presidential debates, we've seen in the betting markets that you had a narrowing of what the market is expecting as far as what the margin of victory could be, for a candidate. And there's greater scrutiny now looking at the different proposals and the discussions about whether it will be a blue sweep. The key question we're getting is, will you see some of the tax cuts we had rolled back in the first year? I think there's also a lot of focus on just the fiscal stimulus package, that the chances of getting something through the Congress before the election have clearly gone down. So are you going to see more executive orders? Now, most everyone has been budgeting in that you would have $1 to $1.5 trillion stimulus. So that's a change in just the assumptions as well. There's the fiscal stimulus, the elections, the vaccine race. These are all the things that I think will be driving sentiment in the next couple of months.
So, Joyce, when you look at the markets, I mean, they typically bottom before the recession. How would you play it when you look at the markets and where they're at now? You're seeing a tech sell-off in the FANG stocks. Some are saying this is just healthy consolidation, taking some froth off the market. But where do the markets go from here, and how should we play it?
Well, the tech stocks are 20% above the cyclical highs. So even the sell-off we've seen has been barely a dent in it. But I think the question we're getting is, have we seen a K-shaped recovery, that you had all the tech take off and all of the other sectors really come down? And are you going to see some type of convergence? So we are looking at the different proposals that are being put out by the candidates. Could you see, if it is a Biden victory, that there's an increase in infrastructure spending and in materials? There's an increase in the minimum wage. Could it help consumer discretionaries? Though there's a closer look at the proposals by the candidates, and also whether you will have some convergence between growth and value. Now, I still think that it's growth stocks that will continue to perform reasonably well here. You still have, looking at the economic data that's coming out for this quarter, that about 70% of countries are beating economic expectations. So I think there's positioning for what the presidential race could bring, but there's also a look at just whether you will see more convergence between growth and value.